Bitcoin trend analysis. March 1st, 2026, Sunday. The market is a vicious battlefield, with both bulls and bears landing knockout blows in spectacular display of extreme volatility. Just as one side seems to gain control, the other launches a ferocious counterattack, leaving traders caught in a bloody and indecisive war for liquidity. The new month begins not with a clear trend, but with a high-stakes battle that will likely define the direction for the weeks to come. Looking back, the end of February was a story of a spectacular resurrection followed by a brutal conflict. The predictive indicator below the price perfectly captured this saga. After painting a massive V-shaped reversal from yellow to blue and igniting a powerful long signal, the rally peaked. That peak was met with a sell-off, with the indicator briefly turning yellow. Now, out of that consolidation, it is once again attempting a fragile blue ascent, signaling that the bulls are fighting desperately to maintain control after their initial stunning victory. Today, Sunday, March 1st, the session is defined by this extreme volatility. The price action is a chaotic whipsaw. A massive V-shaped recovery off the lows was followed by another sharp rejection. The white moving average is not a guide. It is a central trench line in this bloody war, a battleground that is being repeatedly crossed with force around the 67,000 level. The liquidation heat map provides a chillingly clear picture of this war. The price is not trending. It is trapped inside a massive, bright yellow band of liquidity that is formed between 66,400 and 68,500. This is a high-volume node, the absolute fortress where the war for the new monthly trend is being fought. To break out, bulls must hunt the short liquidations waiting above 69,500. To fail, bears will hunt the long liquidations that form the floor of this fortress below 66,400. The volume speaks with the force of a series of explosions. The chart is littered with massive purple spikes of volume on every major swing, both up and down, confirming that these are high-conviction, institutional-level battles for control. The best trading strategy in this environment is one of extreme caution and patience. Attempting to trade a trend in the middle of this liquidity fortress is financial suicide. The highest probability play is to wait for a confirmed, high-volume breakout that finally escapes this brutal range. The probability of a sustained trend emerging from this exact spot is low. The probability of another violent, liquidity hunting move is exceptionally high. Condition for continuation. For a new bull trend to be confirmed from March, the bulls must do more than just rally. They must win the war. This requires a decisive, high-volume breakout that shatters the top of the liquidity fortress at 68,500 and holds it as new support. Only then would the path be clear to hunt the next cluster of short liquidations near 69,500 and beyond. Condition for reversal. If this current recovery attempt, signaled by the new blue line, fails and the price breaks down below the floor of the liquidity fortress at 66,400 on a surge of selling volume, it would signal the bulls have finally been exhausted. This would almost certainly trigger a swift and violent cascade down to hunt the long liquidation clusters below, confirming a bearish start to the new month. If you're enjoying this video and want to see more just like it, make sure to hit that subscribe button. It's totally free and helps us keep creating awesome content for you. Don't forget to like the video so we know you're loving it, and drop a comment to let us know your thoughts. We read every single one. And if you think someone else would enjoy this too, hit that share button and spread the love. Let's grow this community together. Thanks for watching. You're the reason we do what we do.